The last few weeks of 2025 felt, well, chaotic, right? A lot of major headlines that seemed totally disconnected, almost random. But what if they weren't? Today, we're going to connect the dots. We'll look at geopolitics, commodity markets, and this incredible tech gold rush to see the bigger picture, to really understand the forces shaping our world as we head into 2026.
So let's start on the geopolitical stage, where things got really tense. The Trump administration announced a brand new naval blockade targeting oil tankers going in or out of Venezuela. The official reason was a response to alleged theft of U.S. oil and land. A pretty dramatic move.
And it wasn't just happening on the water. This was paired with a major clampdown on travel. Citing failures in vetting travelers, the White House expanded its travel ban to include citizens from 20 more countries, and on top of that, anyone holding a passport issued by the Palestinian Authority. Now, you'd think all this friction and naval blockade, that would send oil prices through the roof. But nope, that's not what happened. It turns out the markets were way more worried about a potential oversupply of oil, a glut. So crude prices actually went down a little, with Brent settling around $62 a barrel.
But it was a totally different story for copper. I mean, wow. The industrial metal just kept climbing, smashing records and blowing past $12,000 a ton. So what was the driver here? It was this massive fear of a global supply squeeze, just as demand is exploding for all the wiring and infrastructure needed to power this new tech age.
So let's take a step back. You've got a naval blockade, new travel bans, and then commodity prices going in completely opposite directions. Is this all just random chaos, or are these actually symptoms of a much deeper, more powerful shift happening under the surface?
Well, it turns out the answer seems to connect right back to a modern-day gold rush, a historic, high-stakes technological frenzy. We're seeing an absolutely unprecedented amount of money and ambition pouring into two key areas: artificial intelligence and crypto.
And the ambition in the AI space, it's just staggering. You have founders like Gavin Uberti from the chip startup Etched making these incredibly bold claims. He's basically betting his entire company on one single piece of technology, in his case, transformers, which are the key architecture behind a lot of modern AI.
And that kind of ambition is attracting mind-boggling amounts of cash. Etched, a company started by a couple of college dropouts, raised $120 million in a seed round. This isn't just optimism, It's a full-on tidal wave of capital chasing these huge lottery ticket-style payoffs.
This whole speculative fever really hit a new level of absurdity. Get this. An AI startup called Thinking Machines went to investors with a pitch, but they refused to say what they were building. They were hiring all this top-tier talent, but were completely secretive about their actual product.
And the result of that pitch? Well, even with no product and no public plan, Thinking Machines raised a record-shattering $2 billion seed round. That's a $2 billion bet on a total secret. Just incredible.
Okay, but when you have that much money and disruption happening that fast, you know a reaction is coming, and it is. Governments and international bodies all over the world are now racing to get some kind of control over this new Wild West. Over in Europe, for instance, their big landmark crypto regulation, it's called MiCA, is finally moving from policy to practice. But it's complicated. It's this staggered timeline for the whole industry to get in line, with different deadlines hitting different countries at different times, plus brand new tax reporting rules kicking in for 2026. And this really shows you the fundamental clash in how different places are thinking about this. On one side, you've got the EU, and they're pushing for this really comprehensive, sometimes pretty heavy-handed set of rules. Then on the other side, you've got the new CFTC chairman in the US basically saying, hey, let's use the minimum effective dose of regulation because they don't want to accidentally crush innovation. And it's not just a US versus EU thing. I mean, everybody is scrambling to write their own rulebook. You've got Hong Kong rolling out a new stablecoin framework. Vietnam is actually giving crypto legal status. It's creating this really complex and sometimes contradictory patchwork of regulations all over the globe. But here's the catch. This whole explosion of innovation and this mad dash to regulate it, it's all happening against a backdrop of huge and sometimes really hidden financial risk. One of the big worries for people watching the markets is the rise of what are called circular deals. These are these transactions, especially common in AI, where it looks like money is just being passed back and forth between companies. It creates the appearance of massive revenue, but it might not actually be real. So here's a simple way it can work. An AI startup invests, say, $1 billion in a big cloud provider for computing power. Then that same cloud provider agrees to spend that $1 billion right back on the startup services. On paper, both companies get to report huge growth, but it forces you to ask, is any real sustainable value being created here, or is it just money moving in a circle? And to really get your head around the scale of the money we're talking about, just think about this. OpenAI reportedly has investment commitments of around $1.4 trillion. As Howard Marks from Oaktree points out, if you counted out $1 every single second, it would take you over 31,000 years to get to 1 trillion. It's a number that's almost impossible to comprehend. And this is where a little bit of history can be a pretty powerful warning. The AI boom right now looks strikingly similar to the radio bubble of the 1920s. Back then, RCA was the NVIDIA of its day, right? It was this incredible, world-changing technology with a fuzzy business model that fueled a massive bubble. A bubble that, in the end, lost 97% of its value. So you put it all together, the geopolitical friction, this insane tech frenzy, the scramble to regulate, and these very real fears of a bubble, it all comes together to set the stage for 2026. It perfectly frames the huge questions we're all going to be facing. The year ahead is really going to be defined by a fundamental clash. Think of it like a car. On one side, you have the engine, this explosive fuel of trillions of dollars in tech investment pushing us forward. But at the same time, you've got these powerful brakes being applied, global regulation, and the unpredictable friction of geopolitics trying to slow things down. Which brings us to the ultimate question as we look to the future. Are we witnessing a true technological breakthrough that's going to reshape our world for the better, or are we living inside a massive financially engineered bubble that's built on an illusion? Honestly, figuring out how to navigate this world, being pulled by these incredibly powerful conflicting forces, that is the defining challenge of our time. And as we think about all that, the investor Howard Marks leaves us with this really provocative and sobering final thought. He says, given the unbelievable enthusiasm around AI, if it doesn't produce a classic history book bubble, that in itself would be a first. Something to think about.